Have you ever shaken a soda can really hard? At first, nothing happens, but all the pressure is building inside. Then, the moment you open it, everything bursts out with force. That exact moment of release is what traders call a breakout. In trading, a breakout happens when price finally moves beyond a key level of support or resistance. It's the moment the market escapes from being stuck in a box and starts a new move with energy. Imagine price bouncing inside a room with a floor and ceiling. It goes up, it goes down, but never breaks through. Suddenly, it smashes the ceiling and enters a whole new room. That's the breakout. Why should traders care about breakouts? Because they often signal the start of strong new moves. Think about cars waiting at a red light. They are stuck and everyone's waiting. The second the light turns green, all of them rush forward at once. That's a breakout, the release of pent-up energy. There are different types of breakouts. Sometimes price is stuck in a sideways range and then breaks out. Other times it happens after a chart pattern like a triangle or a flag. Sometimes it happens on big news, when one candle blasts out of nowhere. But here's the catch. Not every breakout is real. Some are strong and keep running. Others are weak and snap right back. That's why beginners need to be very careful. The first step is to identify the level. Look for areas where price has been rejected multiple times. Those are your key zones. The second step is to wait for the actual break. Don't jump in just because price touches the level. Wait for a candle to close clearly above resistance or below the support. The third step is to look for confirmation. Many times after breaking out, price pulls back to reset the level. If it holds, that's your confirmation to enter. The fourth step is risk management. Always place your stop loss just beyond the broken level. That way, if the breakout fails, your loss is small. Now, let's talk psychology. Breakouts happen because traders get trapped. Imagine sellers defending resistance again and again. When price finally breaks through, they panic and they close their positions. That means they buy back, which pushes price even higher. At the same time, new buyers rush in, excited to ride the move. The mix of panic and momentum creates the breakout surge. Everyday life is full of breakouts. Think of a concert ticket website before sales open. Everyone waits in line refreshing the page. The second tickets go live, thousands of people rush in at once. Or picture a dam holding back water. Pressure builds quietly, then suddenly the wall cracks and water bursts through. That's the breakout energy. Of course, beginners often make mistakes. The first mistake is chasing too late. They enter right at the top of a huge breakout candle only to get caught in the pullback. The second mistake is falling for fakeouts. Price pokes outside the level, they rush in, and then it snaps right back into the range. And the third mistake is ignoring the retest. Many beginners skip the pullback entry, which often offers the best risk to reward. So let's recap. A breakout is when price escapes beyond support or resistance. It matters because it often leads to strong new moves. Breakouts can happen from range, patterns, or news. The safest way to trade them is to mark your level, wait for a close, look for a retest, and manage your risk. Not every breakout is real, so avoid chasing and be patient. In short, a breakout is the market's way of saying, I'm done being stuck. If you can spot them, wait for the confirmation and control your risk. You will be ready to catch some of the most powerful moves in trading.